Hey guys, Tyler, seller accountant. I wanted to show you a picture of some typical financials that we would see with an Amazon seller or other e-commerce seller. This is first of all a P&L, pretty typical single channel seller. They're just selling through Amazon. I want to encourage you to use the numbering system within QuickBooks Online, or if you're using Xero, use their numbering system so that you can override the natural alphabetizing that happens. I want to be able to tell my financials what order I want things in, and I want that order to actually be exactly this. I want my gross sales number to be on top. I want any kind of promotions, shipping, refunds, and reimbursements from Amazon to be sub accounts, and I want to be able to see a total picture, kind of the net sales number for this sales channel. I'll show you in a minute what it looks like for a multi-channel seller. I personally like to have a very simple cost of goods sold section. By the way, you have to use accrual accounting. You can't get away with using cash basis accounting in e-commerce because it doesn't give you a clear picture of your profitability in any given month. The 6,000 area is going to be your overhead, any salaries, any advertising expenses, dues and subscriptions, that kind of thing. Again, funny. This is a particular business that's incredibly simple, but I do want to keep this as simple as I possibly can keep it. And so let me show you a picture of this on a more complex seller. So this is a seller that has a few different viable sales channels. You can kind of see still that Amazon, that 4,100 accounts, the first viable sales channel. Those same four contra accounts or accounts that modify Amazon sales, the refunds and reimbursements and whatnot. And so now I can get a total picture really quickly of what over this period of time was the net performance of Amazon as a sales channel. It was a little short of $1 million here. Now I have some other sales channels. A couple of them are getting pretty close to being viable. Shopify, eBay. eBay's really not viable yet. We have a couple of customer direct sales. But at the end of the day, I'm able to split each of these sales channels up using the numbering system to where I can zip these up or have them spread out like I have it here, and can see the overtime sales performance of each of my sales channels. If I were to have this set up on a month-by-month basis, you would see this is very consistent. You want to have very consistent accruals each month. So cost of goods sold, again, here, very simple. We're using eBay and Shopify, so there are some merchant fees. And then again, I'm going to have more expenses because it's a bigger business down here below the line. But I want you to notice that for the advertising, we recommended this particular seller split out because they have significant advertising expenses in a couple of different sales channels. And we wanted to understand how this, 18% invested in ads was being spread out amongst their sales channels so that we can understand where they're getting good ROI. You're going to have all your other expenses, office, salaries, and whatnot, leading you with your total profitability. Now let's look at a balance sheet really quick. Very simple balance sheet here for a seller. Again, you're going to kind of use the standard American numbering system. Again, think about who your audience is. You're your first audience. You're going to make good decisions. But even beyond that, you want to be able to get these financials in front of investors and bankers and have them be able to read them extremely quickly. And so my 1,000 area is my assets. I'm going to have cash. If I'm doing accrual accounting, I'm going to have a carried balance or a receivable that Amazon owes me at the end of each month. And that's just because that 2-week period almost never ends right on the 30th or 31st of a month. And so I'm going to have some amount of cash that Amazon owes me going into the following month. I'm going to have a set of inventory assets and warehouses. Depending on how complex your inventory model is, you may have a couple of accounts here on your balance sheet for inventory. And then I may have some prepaid expenses. If you had fixed assets or vehicles or equipment, that would be on the asset side of the balance sheet. Also, from a liabilities and owner's equity standpoint, these are the liabilities are the 2,000 area. You're going to have your payables, your credit cards, your notes payable, any sales tax payable, any payroll payable, all that kind of stuff is going to fall here. And then your equity is going to kind of be what's left on your balance sheet, but it's going to be, any investments you've made, any draws you've taken out of the business, and then any retained earnings and net income you've had. And so the net effect of this is that with the balance sheet, the total assets always equals the total liabilities and total owner's equity added together. And so I'm hoping this gives you kind of a brief picture of what maybe a simplified, standard investor grade set of financials for a seller would be. And I hope that you take some simple steps within your accounting system to kind of bring your financials up to code so that you can really be read by investors easier. Take care.